Bade Ajidaun from Alpari is here, and we're looking at the currencies market. Now, Alpari is a partner, a certified partner with Alpari New Zealand, and they offer training services in the currencies market. Thank you so much for being here.
Yes,
now, of course, today we're looking at some technical analysis, but before we go into that, let's just quickly run through 1 or 2 minutes with the global stock markets this morning. What the trends we've seen this morning, we've seen some mixed numbers. Wall Street was in the red yesterday. Asia is up this morning, and Europe is also currently trending higher.
Basically, one of the major things we saw yesterday was the issue we had in the Swiss economy when they capped the Euro CHF at exactly 1.20, and we saw a massive move to the upside. The Swiss were complaining that they don't want the Switzerland franc to continue gaining or appreciating higher than the euro, and that they have to, because people over time have been running to the Euro CHF, that is the euro versus the CHF currency, as a safe haven when they are uncertain about what is happening in other currencies, so they move towards the Euro CHF. So because of this, we have been seeing the CHF gain strength more than the euro. But there was a consensus meeting yesterday, and we were like, okay, they don't want the Euro CHF to go above 1.20. So if you look at the Euro CHF, we have been having a sideways market right from yesterday. And concerns are how can these people really maintain their stand on this issue? And the Eurozone are like, the Switzerland economy are like, okay, this is what we want, and we're going to make sure we do everything as much as possible to ensure that it stays as that. But on the Eurozone, a meeting should be going on probably by now, where the Germans are supposed to provide aid, and they are still on a discussion. Are we going to provide aid? Are we not going to provide aid? But the majority of them says that they want to stop providing aid to the debt.
Debt-ridden neighbors.
Yes, the debt-ridden neighbors. So it's a serious one for them until we have our figures, until they come up with whether they're going to have a bailout plan or not. Then we are not sure what is going to happen in the Eurozone. For the past 7 days, the dollar has been gaining strength above most other currencies. That is in the currencies market. From the euro versus the dollar has been gaining strength for over 7 days. I think it's around 1.3 thereabout. And
so is that investors running to the dollar as a safe haven, hedging against other currencies?
Because basically now for them the euro is definitely not the place
to be until some of the issues are resolved.
Oh, okay. Yes, same with the Great Britain pound versus US dollar. It has been gaining strength. And Obama is now planning to come up with a 300 million job stimulus for the economy.
For tomorrow, of course. I know so definitely markets will be definitely keeping an eye on the speech, the job speech tomorrow. Now let's go into the currencies market now. Yeah. For a currencies trader or for the currencies market, technical analysis is extremely important. Now just quickly run us through what it means and how traders can use it.
Yeah, technical analysis is a means of studying the market. Now you want to have an idea of where the currencies market, the financial market, the stock market is heading for. So how do you make informed decisions? All right, you need certain tools. So technical analysis is a method of analyzing future price movement based on past occurrences. We have this adage that says that history repeats itself. So if I want to know what's going to happen later on in the future, I need to go back to the past to observe what has happened. Based on that, I can make inferences of what will likely happen in the future. So technical analysis makes use of statistical data to analyze, forecast, and predict what's might likely happen. And these are tools the futures market makes of, the commodities market makes use of, the stock market makes use of, and we also make use of these tools in the currency market, basically.
Now, does it really work? Because I've seen some of I saw some graphs, some charts that you brought, and I was telling myself, because you said for your basic classes you have that Alpari offers is about a week or so, apart from the advanced classes. And looking at this data, they look so I don't want to use the word, repeat the word technical. They are technical anyways. Yeah. So how do your students cope? Is this something that can be learned?
Yeah. Basically, there's nothing that can be learned. Right. When you say, for instance, I'm sorry to say, Nigerian is not an English-speaking.
Yes, obviously.
We learned it, right? And they are speaking English.
Now, this is just what I was referring to the chart on the screen right now. It looks really, complicated. Let me use that word.
Yeah,
but obviously this determines for you everyday trade whether or not a trader is going to lose or gain.
Yes. Yeah. Now, from what you are seeing right on the screen is a representation of what is happening in basically two economies, that's the euro versus the dollar. All right. Now, we have about three technical analysis representation right there on that chart. We have the one in the wave-like form, which we normally call candlesticks.
Okay.
Candlesticks was developed by the Japanese commodity traders to trade rice. All right, and we use it to understand the sentiments between buyers and sellers, what they are doing in the market. All right, in the market is a struggle between demand and supply. You want to understand who is going to gain hedge. All right, I need a tool that can effectively tell you who is going to gain the hedge. So candlestick is one technical tool that can help you to analyze this effectively. Right, in a technical school, most of these things you have to undergo a form of training, like we said we give in our parents. So right here, what you need to understand is what does this candlestick, what do they stand for, what do they represent? All right, what do they stand for, what do they represent? The other one in the red line is what we call moving average. Moving average takes an average of price over a certain period of time, maybe 4-day, 5-day, 200-day period, is to give you an understanding for the past couple of days, price has been moving in social direction, whether trending up or trending down. So these tools can give us an idea of whether the markets are going to go up or they're going to come down. And the one you are seeing below is the stochastic. The stochastic is an oscillator. Price is like a pendulum. It moves up and down within a cycle. At one point it's trending up, at another time it's trending down. So technical analysts came up to say, okay, how can we understand the cycles within price? So they achieved that by developing an indicator. One of those indicators is what you are seeing right now, the stochastic, which is just below the chart. It moves between 80 and 20, and whenever it goes above 80, the market is normally said to be in an overbought region, and whenever it moves below 20, the market is said to be in an oversold region. So
when you say overbought region, meaning stocks are overvalued, or whatever it is?
The currencies are overbought, and when they are in overbought region like that, what we normally see from past is that we begin to see the pressure turns down, and if it's overbought, you begin to see price pushing down. At that point, the traders are beginning to think of taking a sell position. And when price moves way below 20,
when you say when you say sell positioning themselves for gains to make,
yes, to sell, to go short on the market.
Okay.
Yeah, and when they see price goes below 20, it's in an oversold region. That is, this currency pair has been greatly sold, and sooner or later the selling pressure is going to ease off, and the buyers are going to jump back into the market to push prices back up. So from that point, the traders are thinking of taking a long position or a buy position to ride the market back up. And we said earlier on that in the currency market, you make money both in the rising market and in the falling market. So you need a tool that can effectively tell you that, okay, this currency pair is about to drop and this currency pair is about to rise. So technical tools, to a large extent, though they cannot 100% tell you the direction of the market, but to a large extent they can give you an idea of where the markets are heading for.
So you're saying that they can also at the same time shield you from unnecessary risks or losses?
They can. Yes, they can. Because what are the tools? A doctor makes use of, what do you call this now?
Stethoscope.
The stethoscope, when diagonizing and all that. So in the currency market too, you need your own tools to be able to understand what is really happening. And that's what technical analysis, that's where it comes from.